Market is falling, and then suddenly, one candle changes everything. That candle has a name. It's called the engulfing pattern, and today you're going to understand exactly what it means, why it works, and where to find it inside Tradetron. The engulfing is a two-candle pattern. In the bullish version, you first see a small red candle, then a big green candle forms that completely swallows the red one's body. That's the engulf. In the bearish version, it's the opposite. Small green candle, then a large red candle swallows it whole. Simple visual, powerful meaning. Here's what's actually happening inside those two candles. In the bullish setup, sellers were in control. The red candle says bears are still pushing. But then the next candle opens even lower, and instead of falling further, buyers step in hard. So hard that they push price above where the previous candle even started. That move tells you sellers are now trapped. Buyers have taken over. In the bearish setup, same story, opposite direction. Buyers were winning. Then one aggressive red candle wipes out everything they built. Buyers are trapped. Sellers are in control. This is not just a candle shape. It's a power transfer happening right on the chart. Let's make this real. Imagine SPY has been pulling back for 3 days toward a support zone. Then on day 4, a small red candle forms. And on day 5, a large green candle completely engulfs it right at that support level. That's your signal. Buyers defended the level aggressively. 3 simple rules for trading it. Rule 1. Context matters. Engulfing at a key support or resistance level is meaningful. The same pattern in a choppy range? Ignore it. Rule 2. Always wait for the candle to fully close. Never enter while the candle is still forming. Rule 3. The bigger the engulfing candle relative to the first, the stronger the signal. Stop loss goes just below the low of the two-candle setup for bullish, just above the high for bearish. Inside Tradetron, this pattern is already built in. Here's exactly where to find it. In your strategy builder, add an entry condition and select the position keyword. From the function list, you'll find engulfing. Checks if the candle was an engulfing candle. The syntax looks like this, shown here. The -1 means you're checking the previous completed candle, because you never want to check a candle that's still forming. Now, here's the important part. The output value tells you which type of engulfing it is. If the output is greater than 0, that's a bullish engulfing. Buyers took over. If the output is less than 0, that's a bearish engulfing. Sellers took over. So in Tradetron, for a buy condition, you set it equal to 1. For a sell condition, you set it equal to -1. Equals 1 for bullish and equals -1 for bearish in Tradetron Builder. Set your instrument, SPY, AAPL, or whichever US market instrument you're trading. Choose your time frame, and Tradetron detects the pattern automatically. No manual chart watching needed. So to recap, the engulfing pattern is a two-candle power shift. Bullish near support means buyers took over. Bearish near resistance means sellers took over. Use it at key levels, wait for candle close, and in Tradetron, the key word is simply engulfing under the position function. Next video, we're covering the Morning Star, a 3-candle pattern that gives you an even earlier warning of a reversal. See you there. Before you go, a quick reminder, everything covered in this video is purely for educational purposes. We are not financial advisors. Nothing here is a recommendation to buy or sell any security. Always do your own research and consult a licensed financial advisor before making any trading decisions.